Hello everyone, we are going to look at charts at EPSMomentum.com. The charts that lets you monitor earning momentum, timing momentum, and market score. So stick around. So let's have a look at the charts. Here you can do a couple of things on the chart. So first off, monitor prices, of course. You would know that the prices and the latest prices, the date of the prices here, when it's during the day, you would see a timestamp of when the price was updated last. It is not truly real time. They're dated on a half an hour to an hour basis. It's good enough if you just want to monitor what's going on with a stock and you're not trading day in day out. Alright, anyway, so this on the chart, you can do a couple of things. So yeah, monitor prices. The second thing you can do is on the earnings, you can see at every single day on the earnings day the actual change of EPS and sales. So EM2, EM6, EM5, you can see the level. And then EPS change 21%, 13%. You can see it by just hovering the mouse on it. So that helps you get the info straight away as to whether this was a good quarter or not. So it's a pretty useful thing. The next thing is obviously you can monitor prices and volume, but here you can see three indicators. So if you've watched all the other videos, you would know a little bit about those indicators. But so let's go over what they are. So the first one, the blue one, is the market score. So it's basically the ratio of the stock price over the index. So that is pretty simple and self-explanatory. As the indicator goes above zero, the stock is outperforming the index. As it goes below zero, the stock price is underperforming the index. So obviously you always want to be in a situation where you actually buy a stock as it is going higher up compared to the index. That means that you're beating the index. So that's useful in and of itself. I would say that's really the major trend, or I call it the tide, the market tide. You know, as far as this index is, as far as this stocks is concerned, right? So is it beating the tide or not? Is it beating everyone else? And the second thing is maybe the timing momentum. So timing momentum is that green line that you see here. This timing momentum is critical to help you see whether the chart is actually the stock price is actually in good standing, and if it's a good opportunity for you to in terms of a price momentum. But so the interesting thing is you see how it rallies all the way flat out in some sort of a straight line going up. Well, guess what? The green line actually never touches zero, almost. So that means it's keeping you inside the stock, in the stock, and not giving you any reason to not invest in the stock. As soon as it starts declining here in this drop, you see how it reaches the zero and it's actually keeps you holding it, but then it goes below zero, trying to keep you out of it, right? And then it rallies back. So as soon as it's negative here, you want to be cautious and obviously avoid the stock. So what's in the timing momentum? A bunch of stuff. There's actually a lot of calculation of several levels in it. So you have moving averages, you have distance to high, percentile, you have a short-term window, long-term window. So it's a pretty complete analytics, and very it's very deep. Lots of things inside, but it helps you stay out of a stock, or points you to a good moment where the stock is rallying or in momentum. Now, what about the yellow line? Well, the yellow line is the fast change of the green one. So it's really the timing bias. So it's a bias on timing. So see how this is declining here? Well, the yellow line gives you that little burst of maybe positive outlook that you can see here, which was that little thing here. So it gives you a very quick change in trend for the green line. So see how the green actually touch the zero, like a negative number and a bottom per se. Well, watch the yellow line. The yellow line actually becomes positive the day later. Why? See, it went from -6 to actually +5. So that is signaling that there's a clear-cut trend starting up in the green. So there's two ways to go about this. As you may have noticed on the rules and the strategies, the system only invests in all three if all three lines are above zero: the blue, the yellow, and the green, right? So that is typical. So you would in there invest only on the 27th of March, which is where both the green line, actually it's on the 30th of March, both the green line, the yellow line, and the blue line are above zero, right? Why? Because the green line is before that below zero. Well, guess what? On the yellow line, if you want to be a little bit more aggressive, meaning picking up the trend as it happens and don't want to be that conservative, the green helps you being conservative. The yellow is really if you want to be an aggressive investor. The aggressive investor here would use the yellow line and kind of ignore the green line. It will know with the yellow line that that things are turning around, and that on that day, the 23rd of March, it's negative, and on the 24th, it's positive. So we'll stick to the blue and the yellow being above zero and accept that the green could be a little bit below zero and start investing on that day. Actually, the 23rd of March is considered to be the lowest point of the market in this crisis. So either you're conservative and you wait for all three to be above zero, or you're a little bit more of an aggressive investor and you want to really pick it up as it grows, and therefore you pick the blue line and the yellow line above zero, and you wait for the yellow line to pick up here. And so you kind of ignore the green line, but then the green line will come a couple of days later, even a full week later, right? So this is, maybe we can see another example of this. Yes, so here we have the same thing here, where again, the blue is negative. Interestingly, the blue is actually negative all the way. So keeping you out of the stock, right? So that's interesting here. But otherwise, you can see the yellow line is positive before the green line, right? But here the blue is keeping you out of the stock, so which is good. What other things you can do with the charts? Couple of things that people don't know. So first off, you can change the colors, the candles, the scale, the background color. You can change that. So that's pretty easy. Say you want to put the candles in blue. I mean, some people want to do that. You can. The other thing you can do is you can actually compare with another item. So I type the SPY, and what you can do is you click on that little cog formatting style, and then maybe I put it in yellow so that we see clearly. Right, so see, this is the S&P compared to the stock, and the good thing is they are both normalized. So as I zoom in or out, so here I'm zooming in, let me make it a little bit space here, and let's say I want to start on the 1st of January, which will be here, right? So 1st of January I'm starting. You can see the S&P is down 7.64%, whereas Microsoft is up 23%. So it's useful to see how these stocks perform compared to another index or another ticker. Okay, so this will be that button here. The other thing is indicators. So you have a slew of indicators here that you can add, Williams or Bollinger Band, average true range. So say I want average true range, you have another average true range here showing up. You can always change the style as well. Actually, it's here in the cogs. You can make the line a little bit fatter, and that's it, right? So you can monitor the size of the volatility every day. So yeah, again, lots of tools in there. Obviously I didn't go into this, but you can put candles, bar lines, or anything you want here. So again, very useful. You can obviously enlarge the chart and make it full screen. So that's it. Any question, just let us know. Click on the question help button. Thank you very much.